Hello learners, welcome to this video. I am Prithvi Potuganti. I have been teaching data science, AI, generative AI for last 8 years to the working professionals. And in this video, I wanted to talk about why AI is gonna get 3x more expensive and what are the factors which will lead to lower tokens as well as higher token prices. So without wasting time, let's dive into deep. Now, the first thing you need to understand here is we have models and they are generating tokens, and that's what we are using in agents, whether you are talking about coding agents like Cloud or large language models like ChatGPT kind of products. But in fact, there is a lot of underneath engineering appliances, things which lead to this tokens finally producing these tokens. So that's where I wanted to show this pyramid kind of chart where your cloud and ChatGPT is the models which are generating the tokens to you and which we are using it day by day. But it is not just the only thing which can produce the tokens because these models need to sit on top of some infrastructure. For example, it needs a GPU, it needs a RAM, it needs a server. And when we are talking about systems like ChatGPT, which are catering to a billion users, right? These needs to be scaled. You cannot put a one server and expect it to cater to 10 users and keep on scaling it like that. So real life systems like this have to be scaled, and that's where hyperscaler kind of companies come into picture. One of the example is Microsoft Azure, GCP, Google Cloud, and AWS. And you also have companies like CoreWeave, the new age companies which are coming up and setting up the core infrastructure for the OpenAI and Anthropic kind of companies. Now, if you look at it, these companies just pay some cost to this compute cost to these companies, and the real servers or real infrastructure is not built by OpenAI or Anthropic. Infrastructure building is happening at the next level. But if you see, they are also dependent upon the other set of companies. For example, Nvidia produces, designs the GPUs and supplies the GPUs. Similarly, Micron designs and supplies your memory. AMD also does the processors, chips. Likewise, you have Intel. So when you talk about server, a server is not just GPU alone. Server has the memory as well as disk space and everything involved around the system. So we have all this coming into picture, and now none of these companies manufacture the chips directly, though they design. For example, Nvidia designs the chips, but they don't manufacture it. They don't get the silicon, raw silicon, make it into wafers and produce nano chips level things like that. And all of this outsourced to a company called as TSMC, Taiwan Semiconductor Manufacturing Company, which is kind of the solo or monopoly in this manufacturing field where semiconductors at a nano level, chip manufacturing, that's they have what they have mastered. So, and finally, all this sit on top of data centers because their data centers need physical assets, for example, land, water for cooling those data centers, and finally, the electricity. So when you talk about tokens, the cost for these tokens is not just coming from the model cost, but it is coming from all the three layers here. And let's now in the next part of video try to understand at which part of the layer where there is profitability, where there is no profitability, who is charging more, who is charging less, who are subsidizing, who are gonna win the game, and let's try to understand how the entire system is stacked together at one place, and how are we able to get tokens at a very low price as of today. So let's start with the numbers of OpenAI first. OpenAI is not a public listed company, so the numbers are not public, they are completely private. But thanks to some of the reports which are being verified or statements made by the chief of the staffs at OpenAI, people who are at the top positions, we are able to gather some numbers today. So OpenAI's annualized revenue as of based on the last quarter of 2025 and first quarter of 2026 is about 24 billion dollars. Now, this revenue looks humongous. For example, look at a company which was making $2 billion in 2023 and suddenly it made $24 billion in 2025. That's 12x. In fact, companies like Google, Facebook, Apple took a decade to see this kind of growth. But the companies like OpenAI, Anthropic are doing this in just 2, 3 years. And that's why the whole world is going gaga about it. But not everything is in revenue. If you look at the estimated compute expenses, you'll be shell shocked. So recently, OpenAI sparred with Elon Musk, especially Sam Altman versus Elon Musk. There was the court case, and during the case, there was the oath taken by CTO who committed the compute cost for OpenAI for 2026, and they said that the cost could reach somewhere to $50 billion. Compute cost could reach $50 billion, which is one of the biggest expense for OpenAI. And looking at these two numbers with basic common sense, you can clearly say that, hey, OpenAI is in losses, and the estimated losses for this year could be $14 billion. Of course, so you can say 24 billion minus 50 billion, 26 billion, but the way they calculate losses different. And this compute commitment can come from the future expenses also. So a lot of complications do exist because it's not a public listed company. At the same time, the way people calculate it and spread it across years also differs, especially the compute and the loss. Because of that, we cannot have the accurate picture very clearly. But one thing is very clear, which is OpenAI is currently in huge losses, which is a considerable part of your revenue, which is $24 billion. So that makes me believe that they have to either reduce their expenditure or either increase the cost of the tokens. Otherwise, they are never going to balance this loss, and ideally they have to go into profit. If you look at matured companies, if someone is making 24 billion of revenue, they look for at least 20-30% of gross profit, not loss. So here we are looking at a loss of $14 billion. Ideally, it should be making 14 billion of profit, a gross difference of 28 billion revenue. So what's the problem here? The problem here is this compute spend. So OpenAI is massively subsidizing the compute cost. It's not just OpenAI, it's Anthropic also. Anthropic has a similar picture as well. They're spending so much on the compute and they're making a little money. They're not making profits as of today. But not everything is as sad as this, because people expect that this kind of revenue will keep on growing and at some point of time the compute versus revenue will not have the same scale. For example, compute revenue could go to 50 billion next year and 100 billion another year and maybe 200 billion. Probably by 2030, they're hoping that OpenAI makes at least a 500 billion of revenue. That's how crazy the growth numbers are today. But will the compute scale to that? Is the next question. So, we'll analyze risk and rewards at the model level. So I will look at, hey, what could lead to force cheaper tokens? And I'll also look at force two, what could lead to expensive tokens? And I'll talk about each one of it in detail. So first thing is compute side innovation, which is efficient inference. So, what is an inference? Your model is sitting. So, if you take a GPU, your model sits on top of GPU and uses the GPU power to render the tokens. Now, hypothetically, if I make model more efficient or make some matrix manipulation so that the calculations become easier, for the same compute power, for the same GPU, if I can render the token faster, then that is called as efficient inference. And a lot of innovation is happening on that side. If you wanted to get into AI research, inference efficiency is one good area people were investing money into. Second is smaller and efficient models. We already saw this in GPT 4.0 series. For example, the 4.0 series have reasoning models, but they are very much smaller than the original models. Smaller models with a greater efficiency leads to smaller GPUs, smaller compute, at the same time more efficiency. So there's a increasing push towards smaller models. For example, GPT 5.5 is so huge, but if I use 5.0 model or 4.0 model, and if I can get my task done, I would be more happy to pay lesser tokens, and even OpenAI is happy also. Similarly, the staff side cost, the first 10 years of research on OpenAI, if you look at from 2015 onwards, 2025 onwards, that's a humongous progress. Today, the research from 2025 to 2035 will not have as much as cost as the initial research. That's what I hypothesize. Definitely, these people put a lot of money, good people into research, but they can afford to slow down. Building a search engine from the scratch and maintaining it and continuously innovating is a different ball game. So Google can afford to spend a little less on the research. Same thing, OpenAI can afford to spend a little less on research at some point of time in future. Of course, not now. Now there's a terrific competition between Anthropic and OpenAI on the model side. So they need to keep invested. And one more hope is the abnormal growth continues. For example, more agents, more workflows. So if this kind of flow continues, then utilization will grow up. For example, I take a GPU and I put it on server and I use it only 80% of the times versus I use the entire thing for 100% of the time. The capex is the same. OPEX changes. OPEX is electricity and the water. Capex is the entire capital cost involved in it. So if my utilization factor goes up, then you are using more tokens at the same price. It's just the operational cost. So it's just like you have your own power plant. Whether you produce electricity for 2 days, 18 hours or 24 hours, the capital costs are the same, right? So that's the distinguish. So people are hoping the abnormal growth continues because it will help us in the numbers. Now, all this, any of this side where people keeping efforts, this direction will lead to cheaper tokens. Now, let's look at what could make the tokens more expensive. First, investors push for profitability. So people were investing money into OpenAI as early as 2022. Now we already have 4 years done, 2026. So there is an IPO on cards. When you go for an IPO, generally it's a liquidity event. Many people would like to liquidate. So that the sole reason these people are pushing for IPO is that they wanted liquidity options. They wanted to withdraw the funds. They wanted to book the profit. So investors don't spend infinite time. They don't have decades of time. So IPOs happen. Once IPOs happen, every quarter you have to show results. So at least the investors are patient. They put more money for the growth, but once after the IPO, the ball is different. So the capital is not easy. The stress is not easy on the companies like OpenAI. Second, demand slows down. I wanted to touch upon this. What I mean that by demand slows down, demand does not degrow. Okay, so today there are 50 billion, 1 billion users using AI. Tomorrow there will be 1 billion. But the problem is not that if 1 billion doesn't grow to 2 billion, that's what demand slowing down. So when AI came in, developers and entire first world, especially on the digital side, everyone adopted. Adoption became very popular. It's not like mobile phones, it's not like telecom, it's not like airports and flights. That took decades of time for adoption. But the digital world adoption is so huge. So because of that, the first wave of adoption is already over. Everyone you could touch, you already touched them. The growth prospects are limited. That means that, hey, maybe we will see 5%, 10% growth, but not 100% month on month growth. There's a lot of difference between that. And the model efficiency stagnates. Again, 4 years, we have seen larger and larger models from GPT-5, 5.1, 5.2, 5.3, 5.4. The efficiency of models have stopped. The emergent capabilities have stopped. In fact, there is research which says that, hey, larger models now is not giving better results. And this is one problem. And finally, chip efficiency stagnates. I'll come to this at a later point of time when I'm talking about infrastructure. And finally, the growth or utilization stagnates or goes down as well. People are extensively experimenting, but even if there is a slight increase in price, it's a very sensitive market. So if your token's price goes up, the demand goes down, and if it goes further high, the demand goes down. Remember that 14 billion losses of OpenAI? So this is one force which might lead to expensive tokens. I'll talk about the adoption wave. When I talked about growth stagnating, people might not agree with me. That's absolutely fine. But look at the adoption. The first wave was real. You think of ChatGPT reached 1 million users in days, billion users in probably 3 months. And there were charts showing, hey, Google took so many years to reach this. YouTube took so many years to reach this. Agreed. The first wave was massive, very fast, but that's done over. But you need to find the next wave, otherwise you will not have growth. So now people have started using it in agents. We have enterprise workflows. Many teams are experimenting at every level to use it in different functions: business workflows, marketing, sales, operations, finances, customer support, UI, development, in every possible dimensions across the industries: banking, finance, e-commerce, retail. Everywhere people are experimenting with the workflows. That's the next wave. But if these workflows fail, as said, 70% of these workflows are failing. That means you go back to your old job, 30% only gets deployed. That will give revenue for us because you're generating tokens. If a workflow fails in practice, then you don't use it. And finally, agents or the automation or real world on the robotics, it's a very early phase, but people are extensively using LLMs in this world. But let's see where token usage will expand dramatically. Right now, the idea is this: enterprise workflows hit really good job so that you can increase more and more workflows, more and more token usage. Continuing further, so the side of the first adoption wave is fading, and the next adoption wave, which is enterprise workflows, are working hard. That's the reason, if you look at revenues of OpenAI as well as Anthropic, more than 60 to 70% of revenue is coming from the enterprises itself. Now, let's look at the next layer, who is actually building these servers. So, these hyperscalers are the companies who are taking all the infrastructure capital cost on their head. For example, if you want to build a server, you need to buy that completely. That server may be used for 5 years, but someone has to put money into it, right? And this money will expect returns. This money, if borrowed, you have to pay interest. There is electricity cost, everything. So that's what I will break down today. Hyperscalers, Azure, GCP, AWS, CoreWeave, these are the guys. They go to investors, they go to debt market and raise capital. They pledge their assets and then raise money and buy more assets. That's where the cloud and infra partners come into picture. They buy GPUs plus data centers and those depreciate, and that's how they supply this compute to OpenAI, and OpenAI just pays the compute bill and OpenAI makes the revenue. So here, let's try to look at the numbers. How profitable are these hyperscalers? I've took CoreWeave example because Azure by Microsoft, Google Cloud as well as AWS, they don't give independent numbers. They're huge businesses, cash-rich businesses. It's very hard to look at the individual cloud AI related investments versus the other investments. Because of that, I took CoreWeave. CoreWeave is slowly into AI infrastructure. It supports both OpenAI as well as Anthropic. Now, if I look at the revenues of CoreWeave, by the way, CoreWeave have recently IPO'd and their revenues are very good, 209 million, 1.92 billion, that's almost 10 times. And from 1.9 to they're estimating a 5.2 billion next year. But that's not all. You have to look at the capital expenditure, not the employee costs, nothing, only expenditures towards this capital, which is the servers, is 2024 is estimated 8 to 10 billion, 2025 is 15 billion, and 2026 is 31 billion is the forecast. Again, so these companies are also loss making, at least from when you see the revenue and capex. But there is a difference. Generally, these clusters work differently because if you go and purchase a 15 billion data center, for example, it will have a useful life of 5 years. So the original asset cost is distributed over the 5 years. So you call it as depreciation. That means you need to make only 3 billion this year. That's it towards the capital cost. And then power, electricity costs, cooling costs will be 1 billion a year. That's the second biggest cost. I'll go to the fourth layer and I'll talk about this. And networking plus operations will be zero point 0.5 billion a year. That's the cheapest one. And financing cost, because you're getting all this on interest, so that will be typically 1 to 2 billion a year. So roughly, if you have a 15 billion cluster, you should be charging anywhere between 5.5 to 6.5 billion per year, at least in this toy example. Now, let's go back and look at it. So all of this 2020, so you look at the revenue of 2025, that is around 5.2 billion. That's coming from your infrastructure spend, which happened in 2024. So the 2024 infrastructure spend is not accurate, but it's anywhere between 8 to 10 billion. So roughly, so on 15 billion, if you charge 5 to 6 billion, you're good enough. That's basically the expenditure. But these guys have charged almost made 5.2 billion from just a 10 billion investment. That's around half of it actually, which is still good. I mean, they are maintaining operational profitability here. I'm not going into more technicalities into the economic side and more on technology side also, because I just wanted a normal user to understand this. So CoreWeave, as far as I understand, is not subsidizing anything individually, but OpenAI and Anthropic are subsidizing you. Now, let's try to understand the risk and rewards at the hyperscaler level. Again, I will talk about force 1 cheaper tokens, force 2 expensive tokens. First cost, as you have seen, $5 billion, you are getting it on interest. Finance costs lower, then you are good. For example, now interest rates are a bit elevated. If the interest rates come down further, at least in the US, then these guys will be more happy. But let's say the inflation worries continue, just the post COVID wave 2022. After that, the fiscal tightening happens, let's say, then the interest costs are going to bite a lot. So we hope that the interest costs remain same or comes down. In either cases, you will have cheaper tokens. Second is energy and land becomes cheaper, infra becomes cheaper. So basically, these hyperscalers, guys, the main cost is your infra, memory, GPUs. Today, there is an unprecedented shortage in memory. No one anticipated so much memory requirements. So much so that your consumer grade laptops or servers today are going out of stock. Just like that, prices are going high. Companies like SK Hynix, Samsung, everyone are redirecting the all the resources to build enterprises memory so that they can feed back into these hyperscalers. In spite of it, there is shortage in the market because a building memory and building devices doesn't scale up in proportional to your software. Software is different. You have to expand the capacity. You have to work 5 years back. 2025, you want capacity, you build in 2020. You build capacity 2025, you will deliver memory in 2030. So that's typical years, but people are working to make it faster. So one issue here is this memory is not going to become cheaper anytime soon because of the shortage. Luckily, if the shortage becomes evaporated, shortage goes off, we have a lot of memory suddenly, supply more than demand, then prices will come down. As of today, supply less than demand. Because of that, the prices are elevated, and that's one reason which is worrying people. Then, by the way, heavy utilization factor. By the way, when heavy utilization factor increases, as I said, both OpenAI and both hyperscalers are happy because same RAM, same compute, same data center, you use it more time, just slightly higher compute, your electricity bill will be higher when your utilization goes up. But more token, same revenue, right? I mean, per token revenue will be the same. So at a higher utilization, these guys will make a little more profit than at lower utilization. And expensive tokens, interest rates goes up, infra becomes more expensive. I mean, the supply shortage still exists. There's more and more demand. Let's say more demand for tokens, more demand for infrastructure, then obviously more demand for memory. Memory prices still stay elevated. Utilization factor comes down. For some reason, enterprises don't like it. Workflows are not getting integrated, so you stop integrating AI. Usage comes down. Token price has to go up. If token price goes up, usage further goes down. So it's demand versus supply. So your tokens price should never go up so easily. If they go up, it's going to go even up. So that's a big issue today we have. So that brings us to the next level, which is NVIDIA or the physical asset, infrastructure world. Now, honestly, this is the world where people are making so much money. That's why Asian markets, especially Taiwan, where TSMC is there, and Korea, SK Hynix, memory, Japan, where all of this some of the Asian markets which are very good at semiconductor manufacturing, they're at all-time high because these infrastructure players are making a lot of money. Why? They don't subsidize anyone. They just manufacture things and sell it. So if you look at the metric here of Nvidia results, the revenue is $130 billion, operating income is 81 billion, net income is 72 billion, the gross margins are hitting almost 75%. I mean, you make 100 rupees, 75 rupees is profit typically. That's what it is showing as. So no one has this margins. That's why Nvidia just went, valuation went just out of the roof, and people are crazy about them because they don't have any risk. They sell the chips, and of course nowadays people are Nvidia is investing into CoreWeave directly. Nvidia is investing into cloud. Nvidia is doing to do so. All of these companies, Micron, AMD, TSMC. I'm not sure about TSMC, but most of these companies are putting money back into these companies because so that's what circular economy it is called as. For example, Oracle is also building hyperscalers. Why? Because these are the companies, they are getting a lot of revenue. So that's why infrastructure companies are investing into. So it's like a too big to fail system. Okay, the system cannot fail, everyone wins. That kind of synchrony is going on in the industry. But on the risks and rewards on the infra level, so if your memory manufacturing expands fast, the scarcity goes down and the prices will go down. But as of today, I don't think it's an easy possibility. Second thing is GPU hardware becomes more efficient. What does that mean in the efficiency side? Earlier I looked at the efficiency, but on the inference side, calculation side, model side, but let's say if the GPU itself take lesser watts but deliver more flops of power. So this metric is called as watt per flop. How much power do you need for one flop of processing power? So if that comes down, that is in Nvidia's hand. And typically this is gonna improve because we have seen this improve over the years. Number of transistors on the chip will increase. That's what Moore's law said. And also the compute power required for a flop is always coming down. And I hope GPUs also will have that evolution continue. So, and inference speed also improves, that also saves your cost. But when you talk about expensive tokens, GPU hardware innovation slows down. As you know, GPU is not a new technology, it's a technology almost 20 years old. So much of the innovation has already happened. There is more room, no doubt, but there's not a lot of players also. Right, so it's only Nvidia. There are other players coming in, but for example Google is coming with TPUs, and AMD is coming with its own version of processing capability for models, but it gonna take time, and there's always this risk of innovation slowing down. I'm not saying innovation will not happen, innovation will happen, but if it slows down, then yes, you don't have this, you will have this. And infra manufacturing is still scarce. That's the reason TSMC is the proprietary monopoly in their own field. And it doesn't scale with usage or utilization. So let's say usage goes up, utilization goes up, but manufacturing is constant, then again demand side scarcity will exist. And one more problem here is effective lifespan of GPUs coming down. For example, GPUs are brittle, they don't have as much lifespan as RAM. For example, they cannot be used after 3 years. The current wave of GPUs are 2020 to 2023. We have not seen their end of lifespan yet. And there is no public information on, hey, can these GPUs come for 5 years? So on the economic side, you expected the depreciation to last for 5 years. So when it is $15 billion, I took depreciation of 3 billion. That's I'm spreading it over 5 years. But let's say they either get outdated or they get broken, they get brittle, they are not used, or they get expensive. In either way, if you have to cut down the useful life of the GPUs, then the cost has gone up because the company CoreWeave, which spent 15 billion for 5 years, if it has to close down or throw away the GPUs at 3 years, that loss has to be put back into the account and it has to get that from somewhere. And these GPUs are evolving very fast today. Again, that is another risk. For example, 2022, you purchased the GPU, you kept it deployed, but today you have H200. H200 is more efficient. On number wise, it makes more efficiency to get H200. So I'll get H200. But the previous GPU is lost, right? There is a loss for it, 2 years of depreciation time to add it to the books. So, in any way, if you evolve very fast, that is also going to be one concern. And it is not direct simple problem, it's a complex problem. Because the core weave tries to maximize its profit. It doesn't look at OpenAI, it doesn't look at NVIDIA. So that's one place where we can have expensive tokens. And finally, the physical assets world, if you look at land, water, electricity, on all three sides, we are already seeing pressure. For example, many places, many data centers in US, the nearby counties, the representatives are fighting, and at least in the many places, you can see this online also. This land around it will have a lot of humming noise, so you cannot live around that area so easily. So land is gonna become scarce. Second, water. We don't have unlimited water. Many countries as of today face the drinking water shortage. For example, if you take India, I don't see one country, one state which has a lot of water surplus, which can go rapidly and expand data centers. And we are still monsoon dependent agriculture. So you're gonna have a lot of conflict, especially when you set up data centers. And this will increase because already you can see water being polluted, land being polluted, electricity being distributed to them. So the physical assets, these are very scarce resources. People need them, very basics. And if you just divert this to data center companies, it is a very big political issue, and politicians will not take bets on it, no matter what the profit. So, what would be the ideal world in that case is you're gonna tax them, right? So you wanna land, you take more requirements, you put the green requirements, you ask them to clean it. The water becomes expensive for data centers, electricity becomes expensive for the data centers. The tax it, governments will tax it. That's the ideal case where they bring a breakthrough. So, all this will make data centers very hard to establish, or I wouldn't say hard, but I would say more expensive for them over the years. Not talking right now, but look at 5 years later, look at 10 years later. So, people are gonna fight back if the basic to them are deprived. And we cannot suddenly produce a lot of water, and same goes with electricity. Already, electric grids are taking the challenges from electric vehicle adoption. Governments can't say no to it. Pollution is a concern. So, electric vehicle adoption will make the grids more and more stressed. Now, AI will make it more and more stressed. The only way for these companies to manage this grid is charge more. And if your fundamental costs increase, as I've shown you, water and electricity is the second biggest head on the data centers. If it is gonna increase, then you have to pass this cost to the compute to the next layer, and it at the end has to pass to the tokens. The tokens cost will go up. So the risk and rewards on the physical world goes like this: land becomes cheaper, water becomes cheaper, electricity becomes cheaper. I don't think any one of this will happen. None of this may happen. Maybe land. maybe land could be easy, but I only see on this side extensive opposition will make the land costs higher because you have to move farther where human habitations are not there, or and building some data centers far away from human habitations is harder, more expensive. Water shortage across the globe, communities pushed for higher price, and again grids became unsustainable, and this also will lead to higher price. And finally, if the AI evolves beyond that, then the governments are ready to create one tax on it, because government always looks for ways to monetize a new technology. When telecom came in, they first started selling the spectrum. In 1800s, no government made money from spectrum, but 2020 every government licenses the spectrum to telecom because that's a rare asset, new asset, right? So I'm hoping in future if AI companies start making money, they're gonna be taxed again, right? Of course, now they come under regular services, software kind of businesses, but I see a possibility of AI being taxed also. So that will add to the extra cost. And together, all of this, if I look at the picture, right? So the elephant in the room is the government tax. That's what I'm talking about. The cheaper tokens have many possibilities, and that's what people are already working on. So it's not that no one knows, everyone in the field knows. That's why model side innovations are being carried out by OpenAI, Anthropic. Cloud innovations are being taken up by GCP, Azure, etc. That is the reason in the cloud infra side also, you don't have a lot of companies. You only have cash-rich companies like Google, Azure, as well as AWS. Similarly, on the hardware side, again, no big, only big players. And in physical world, as you know, so these are the possibilities that we will have cheaper tokens in the future. But there's a lot of possibility that the tokens could get expensive also. So there are many other factors. So what could happen in future? My bet is tokens are going to be expensive. How much? Time will tell, but at least 2 times to 3 times in next 5 years is the bet I'm going to put on. I hope you enjoyed this video. Thanks a lot for watching.